Hey everyone, I'm Stephen Kalayjian, and welcome to Back to the Futures. I'm here every Tuesday and Thursday from 1:30 to 2. It's a privilege and honor to be here with you today. Obviously, with the holiday season upon us, it's like watching paint dry, right? It's really quiet. It's just really, really dead. And I got to just tell you, but there are great patterns. Yesterday, we had the CPI number. S&Ps were up over 50 handles at one point. And then today you figure, the PPI number comes out, but nobody cares, right? But we did get a big sell reversal here using my proprietary software on the 15 and 30-minute time frame. So let's just go and look here. You can see here on the 30-minute time frames, the 60-minute time frame is what cushioned the market here so far. The 60-minute is what cushioned the market, right? And so when you got this push down today, right, after the PPI number, we then had a push down. And then you can see here the 30-minute time frame reversed to sell on my proprietary software indicator 4. Now, we had some really great shorts here. And I'm going to show you. And if we switch to the 15-minute time frame, okay, you can see after we had so once the 30-minute time frame reversed to sell, correlating with the 15, right? We take the first bounce, and here's another bounce here. You can see the spiders and just dropped here. The SPXLs and the spiders and the S&Ps just dropped from 85.5. They just dropped 5. So what you're looking at here, okay, what you're looking at here is the first bounce on the 15-minute time frame right here. And that's when it was around the 11:15, 11:10 mark, when the S&Ps were actually trading around the 86 and a half, maybe 87 handle. NASDAQ futures on that were trading around the 21,700, and they dropped 21,730, and they dropped roughly about 50, about maybe 60 points, 50 to 60 points on the NASDAQ futures. Again, identical, same patterns, okay? Now, if you look here, you can see now here's the second bounce right here, and this bounce came right around the about 115, 120, so the S&Ps dropped 5 there. Either way, the way you look at the market right now is what we're able to identify and see, that we're able to see these moves off the combination methodologies. The 30 minutes reverse to sell, and then you look to short the first bounce on the 15-minute time frame. A really, really great pattern there, I have to tell you. Really great pattern. But again, what's important, okay, what's really important is that there's no volume, right? Nobody's doing anything. Things are like Microsoft is moving. I live in Florida and I'm freezing. Can you believe it? S&Ps are dropping here now. But again, it's really relative to how everybody views the market and looks at the market. I had a young man today tell me that he just looks at the data, doesn't use any indicators. And then he says to me, well, I'm blowing up all my accounts, right? I'm like, oh, that's great. Okay. Okay. So, for me, I just tell people all the time that that when you're trading the markets, you really have to use proper indicators, proper technology. Okay. And so what you really want to be able to do is to be able to use multiple time frames and then apply the methodologies the right way, right? Again, price leads, indicators lag, right? So that's important for everybody to recognize there, okay? S&Ps just dropped almost 10 handles, right? So that's the second 15-minute time frame. You can see, again, very, very powerful here. So if you're looking at the underlying ETF, you're trading the spiders or the SPXLs or the S&Ps. This is how you're able to look at the underlying ETFs during the US session to be able to give you the best effect on trading the market. Okay. And that is really, and that's really super important. Here we go. They're making, look at them. They're down 9 handles just now since since about 120. The S&Ps are down about 10. Okay. All right. So with that being said, it's important, right, to remember that, and I said this earlier, in order to trade the S&Ps or the NASDAQ futures, oil, gold, 30-year bonds, you need to look at the underlying ETFs during the U.S. session. And that hit it right there. That was a beautiful, beautiful pattern there. Again, being able to identify, okay, and say, all right, well, the spiders are negative on indicator 4 on my 15 and 30. You short the first bounce. Now, this first bounce here dropped about 10 points too on the S&P, and here's the other 10-point drop. So you wait patiently for these patterns to set up and to repeat themselves, and that's exactly what is going on here. Again, it's really up to you to do the work, to learn from me, and you know, I give out my cell phone number to the whole world. I don't give investment advice. Everything I do is based upon pure guidance and education. So it's really up to you to be proactive. No questions are stupid. Even here during the Tradier Hub, Back to the Futures, ask questions. I always say at least 3 or 4 times during the segment, does anybody have any questions? Does anybody have any questions? Well, it's important because when you have questions, you want to be able to because you want to learn, right? And a lot of people are very passive because they're like, well, you know, I don't want to ask a stupid question. No question is ever stupid, number one, okay? No question is ever stupid. So I want to be clear with that, okay? With that being said, you know, look at the S&P. Is just there's 11 handles right now on the S&P. Beautiful pattern. Again, using the 15-minute time frame. Beautiful, 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 complete Picasso. Okay, and if you're trading, just say for example, the SPYs. Okay, here it is. You can see you're trading. Look, the spiders. If you just trade the spiders, you just made a point on the spiders here, and you made a point on the spiders here. If you're trading the underlying ETF, right? But what people need to remember and realize, right, is that in the trading world, right, if you need to have the proper mentor, and then you, like myself, and then you have to have the proper technology. And when you have the proper technology, you want to be able to learn the technology, learn the software, right? Like I said earlier, many times, I spent nearly 10 years of my life perfecting my system. I literally was so focused because I wanted to be able to have an advantage in trading the market. And I tell people all the time, if you could walk away every single day and pull money out of the market and not give it back, you have conquered the art of trading, right? Because the market is very difficult. And what do people always say? Oh, it's so hard to, you know, people can't make money trading the market or day trading the market or this or that. I'm like, okay, well, that's great. You know, I don't really believe in that. But again, most people have to remember that when you have someone like me with over 41 years of experience, and I help people. Last night I was helping someone from 9:30 to 10, you know, and just asking questions and talking to me. And I love it. You know, I love it. I love this game. I love it. I want to help people be successful. But more so, it's important for people to really get the concept of when you're trading the market, you want to be able to have everything aligned. You want great technique, you want a great system, a great learning experience. You want to be able to have someone that can really care and help you along the way. And that's what I do, because again, my legacy depends on your success. It's very difficult, even in these times, even for someone with all my experience, to be in a situation where it's just very, very, very quiet. And when it's very quiet like this, right, you want to be able to just pick your spots, right? And when you pick your spots, you want to be and say to yourself, okay, well, the 5-minute time frames aren't really moving, but the bigger time frames like the 15, these are great patterns here. These are really great patterns here. Okay. And so what you want is you want to be able, okay, to recognize the ability to wait for these patterns, be patient. One of my 5 key words: consistency, discipline, confidence, patience, and passion, right? You want to be able to be patient enough to be able to get these trades collectively, wait for this pattern. So I already knew that the 30-minute time frame on the Qs and the spiders reversed to sell. So now what do I want to do? I want to wait to short the first bounce on the 15, and here it is. And then the second bounce on the 15 right there. These are great, great, great patterns, And one of the things I tell people all the time, all right, is that when you're trading the markets, you want to be in the situation to, just hit your goals for the day, whether your goals are 3 handles, 5 handles, 7 handles, 10 handles, 15, whatever points you want to be able to get to. And for me, I have to say that it's really about just getting the proper edge here. And when you have the proper edge, you want to be able to recognize that when you see the patterns, you trade the patterns for what they are, right? And if you're trading the pattern, okay, all right, you want to be able to, again, be in the situation that allows you to see it, trade it, be confident on the pattern, learn the pattern, learn the pattern. And that's really, really important. And that's what I really feel is the utmost importance in when you're trading, learning from me, learning the technique, learning the strategies, learning the overall structure of the market, and being able to enhance your trading. So many people, like this morning, I said earlier, a young man says to me, "Oh, this is what I look at." He just looked at tick data, bar data, with no indicators, no nothing. I'm like, "Well, what are you looking at? I mean, I don't get this, And for me, I think it's just really, it's really fortunate that when people are trading the market, everybody has their own technique. I can't tell people what's right, what's wrong. I just look. My goal is just to teach you for what I see, and it's really about learning and being able to apply yourself correctly and take the mindset of wanting to learn effectively. And I think that's what a lot of people try to get hung up on, because most people say that day traders fail. Well, most day traders fail because they don't have technology, they don't have a right mentor. A lot of them are trading options. A lot of them are trading blind. They don't know what they're doing. And I get it. That's why I built my course at Trade Easy, my live stream, where I'm able to help people dynamically during real live market hours. What else? Okay. All right. It's important for individuals when they're trading the market to be able to not only understand that if you're going to trade the U.S. session using the underlying ETF, but you can still trade the Tokyo session and the European session without any flaw using my software, which is available on TradingView. And you can be able to, a lot of people do that actually, whether you're trading your own account or a funded account. And you know, it's just got to be relative to what you're comfortable with. Some people work during the day. They like to trade the night session. The night session, sometimes the Tokyo session, I've traded it before. It moves very tight, and maybe towards the latter end of the night, as we're getting closer to the European session, is where the volume starts to kick in a little bit. But with that, you know, if does anybody have any questions, we're 15 minutes into the show. So
we have 2 questions.
Yep. Oh, hey, Sev again. Hey, Steve, how are you? I'm doing well. Would you consider gold at 1255 as the first bounce? Yep, that was the first bounce. But what is the MACD telling you on the gold futures? The MACD's crossed positive from below the pivot, right? And now you're going to get one more push up here, and looks like we had a nice good short on the gold off the 15, and that dropped about maybe 3. Okay. But with the MACD positive from below the pivot and the algorithm reversing to buy on the gold futures, not the GLDs, the GLDs are still negative. I still believe that you're going to get the lows are in for the day. And if we do get a big push up here, one more push up, I think it's going to set up a great short on the 30-minute time frame on gold futures. Gold's down 47. There were so many great patterns in gold today. 1, 2, 3. I count 3 or 4 great patterns here in gold. All right. But that's but remember, you got the first bounce that happened around 12:30, about 1 o'clock on gold. Gold dropped roughly about 3.5, 4. And then the second push down, the next push up traded above 71, then traded down to 08. So there was some really, I hope you were trading gold from the short side today. A lot of great shorts in gold. Also, again, whether you're trading oil or you're trading gold, I mean, you know, so many people have to recognize and understand that using the underlying ETFs really help you in your trading in the futures markets. I can't stress that enough. It really is something to recognize the fact that when you're trading the market, you want to be able to have as many tools in your favor. And I'm trying to educate and teach each and every one of you that when you're in this situation in the market, you want to be able to, when you're trading, to trade and use the underlying ETFs. It's very powerful, very powerful. Look at the market here now. Literally, we're in this for 15 minutes now, and the S&Ps are just like at a 2-handle range here. So it's very important to recognize that you know, it's just really a very slow market. And because it being very slow, you just have to really wait patiently. You have to know and adapt to the market. It's slow. You don't want to get caught. And what happens, right? You then basically say to yourself, this is, you know what? I'm going to wait for the right pattern. I had a nice pattern earlier. It pulled in nicely. I knew it was going to anywhere from 2 to 4 points on the S&P. It got 3. And that's it. So if you could chip away every single day, because my research has shown me that you'll get anywhere from 8 to 12 great patterns a day on the index futures. And if you're trading off of the equity markets, you'll get 4 to 6 great trades a day. So I mean, I'm looking at Tesla right now, and Tesla's not even trading. You know, normally Tesla moves. Yesterday it was up, I think, $27. I mean, the markets aren't even moving here, and I think that's also a big problem. That the markets just right now, it's just nobody cares. People are locking in their profits for the year. All the funds they realize that the S&P is up double digits. Some of them are down, maybe 4, 5, 7 points from the matching the S&P. But they're looking just to be conservative and not give up the gains and be able to say, hey, listen, we didn't beat the S&P. Very hard to beat the S&P or match it. Some people do, some people don't, but most don't. But they just want to lock in, a good return with whatever days we have left, about 15 business days left to the end of the year. So it's also important, okay, that when you're looking at the market, you want to say to yourself that it's always knowing how to size up a trade. So when the 30-minute time frame correlated today with the 15, that push up today on the underlying ETFs, on the spiders, on that first bounce right here. This is how you have to, in my opinion, this is when you size it up. If you're trading the big ones, maybe you go like a 3, 5, or 7 lot if you can, or if you're doing micros, maybe you do 10 micros, 12 micros on something like that. You scale into the short. One thing I will tell you that I find it very, very hard to do is to do single lot entries. Single lot entries are very, very difficult. And what I mean by single lot entries is just saying, okay, I'm going to short an S&P at 85, it goes to 87, and you don't sell more. I like what's called pyramiding. Pyramiding is when you sell 1 at 85, then you sell 2 at 87, then you sell 4 at 89. I'm just giving you an example per se. Okay, I'm just giving you an example per se. All right. What else? What else here? Okay. All right. Let's see. All right. 672. Okay. Now, it's important that when you're trading the markets to maintain stop orders, right? So meaning that when you're trading, like I did, a lot of people don't realize this, that they put buy stop limits in. So let's say you have a buy stop limit at say 77 on the S&Ps right now, right? And then all of a sudden the market shoots up, right? From let's say 75 to 80. Well, you have a 77 buy stop limit. If it blows right through that, you may not get filled. Your limit becomes a bid now. You know that, right? Your limit becomes a bid. Okay. And so what you really need to understand in all that is that when you're trading, you want to recognize, for me, the best way to protect yourself is by putting buy market stop orders and sell market stop orders. Because if you're short, let's say you're short at 84 and now you're watching it drop, or you're short at 83 and you put a buy stop at 77 and news comes out and they run up. Well, wherever it goes through 77, you're buying it at the next price on a market order. Okay. You're buying it at the next price on a market order. So again, it's all about executing properly and being able to use the learning how to put the orders on the ladder. And if you're short, let's say you're short S&Ps at 84 and now they're trading 80, you have an option of covering or covering half the position and then lowering your stop, right? If you're short at 84, maybe you want to lower your stop to 82 to lock in profits, right? You always want to keep moving down. So as the price is going lower, you have the option of covering and then lowering your stop, or eventually just covering the position if you're happy and you made your 3 to 4, 5, 6 points on the S&P. Again, very, very quiet. But again, it's really about just at the point of being able to know the conditions of the market, we're very slow, and then to be able to recognize the moves that we're having in such a way that when we're trading the markets, you want to be now, be able to understand the conditions that we're in. And the conditions we're in are pitiful right now. They're absolutely pitiful because they really are what? You want to be able to understand that when you're trading, to see the ideal conditions. You want volatility, you want market movement, you want volume. I think the spiders, somebody just texted me before, like about an hour ago, the spiders volume, what is it? 11 million shares, I think, or something like that. I mean, 11 million shares, that's nothing, that's absolutely nothing. So, but again, it's relative to understanding the conditions that we're in. And, come January, this is going to be a complete different ball game. You're going to see a lot of volume, a lot of volatility. And even in my 41 years, I don't remember it being this slow this time of the year. Normally we have the so-called Santa Claus rally, and we get these big moves up here. Oh my God, that just got kabooshed. And so, for me, I think what's important, okay, is that, in trading the markets, you want to be able to identify the environment you're in and then go from there. So many people I love trading pre-market, especially if there's an economic number and an 8:30 number. Today was pretty quiet. It did open and then dropped. The number came in higher than expected on the PPI number. But overall, I think what's really important is that, I'm here for you. Please text me 914-500-7484 if you have any questions. Remember, learn from me. If you can, I will help you trade futures. I will help guide you. I will teach you my software. I will be able to educate you on the ability to trade and be consistent. A lot of you are trading these funded accounts. If that was a way to help yourself, but also here at Tradier Futures, the rates are phenomenally low here. You got great margin on micros and on the big ones. It's something that really, in my opinion, it's a great firm, great front end platform. And from there, I just want to say that, if anybody has any questions, a final round here. I'll see you next Tuesday and Thursday from 1:30 to 2. And, so many people are switching over or they're coming and they want to learn how to trade futures. So it really is something I love. I love teaching. And more so, I love the ability to educate each and every one of you. And that's really from my heart. I have to tell you that there's nothing better than seeing last night, even the people I'm teaching at night and during the day and guiding, how they're getting it and they're seeing the patterns. So again, using multiple time frames, using multiple indicators based upon the combination of methodologies that I created, this should be a great path for you to be a very, very successful trader. I want to say thank you for joining me here today. Again, I'll see you next Tuesday. Have a great weekend. God bless you, and God bless the United States of America. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.